Hi guys, I'm so sorry. I thought I wasn't actually. I canceled the idea of doing a live show, and then someone's asking me an hour, 2 hours later, "Hey, so when are you starting?" So thanks, six people, seven people, been waiting for 2 hours. It seems that the need is high. Let me share also on Twitter that I started this live show. Um, I lost tons of money. I certainly did not do well the past year. My God. But okay, that's how it goes as an investor. As they say, any profession or anything you choose to do in life, there are always negatives. Huh? And if you can't put up with the negatives, you're not going to get the positives and the spoils. You have to go through them, and that's the price you need to pay. And these are yeah, this is the price you need to pay, sometimes losing big, so that, well, it's a learning opportunity always. You learn, I learn, and also in my personal life, personal crisis learned me a lot. And success is great, but it doesn't learn you anything. Failure is what really learns. um, happy to share about these things, and happy to give you my feedback. I've gone through lots of financial crises myself, so I learned a lot along the way, and that shows in my returns. Though my returns are down a lot, I'm only at 35% on average per year since I started publishing my and sharing my portfolio and publishing my returns. That was 50% per year only a year back, so it is also my returns, even if you look at the 10-year average returns, are volatile. Also just shared the returns of 2021, very interesting. But let me first look at the questions. Hi Martin, hi Jarmo. Let me see if I also shared it. Um, are you still short on gold? Yes, but I admit that I wasn't wrong in the direction. Gold went down in 2021 with 5%, but I was wrong in the instruments that I chose. Options, I put options. They really have really costed me a lot. I lost about 10% of my portfolio on these options, these put options, and will not do that again. I do have another short, just a simple short on the GLD fund, a big position, but it used to be bigger. I've built it down a bit because it used to be like 40% of my portfolio, so now it's 30%. Because I realized, because I was also having cash in my broker account, and I realized, like, what's the point if I can't deploy the cash? I shouldn't be like raising cash by shorting gold also, because the short trade is as I explained in the past, short trade is interesting not only if you're just short, because that's not worth it, because shorting means unlimited losses and limited profits, huh? So it's not interesting to short, huh? But if you get cash from that short, that changes the whole thing, huh? Then you can actually with that cash invest in other things where you have unlimited profits, but limited losses, huh? And so it's only when you are able to deploy the cash that you receive from shorting GLD, for example, you receive cash. But if you can't deploy it, you shouldn't be shorting it also. So that's why I just took the cash, which was also maybe 10% of my portfolio, and I just bought back the shorts on gold. And so I lowered my short on GLD from 40 to 30% or so. But I'm still short that position. But if I look there right now, I'm disappointed how short is acting. I would have expected when markets crash that short that gold also goes down, and it's not going down. Um, but of course, it could also, like, if the markets do another move down, then you may have more panic, and then gold may also start to go down. But I will judge on gold's performance whether I will keep that short or not. But if gold is not going down together with the stocks, then that's not a good sign for me, because that shows strength in the gold price, and I do not like to short something that shows strength. I'm convinced still that my long-term outlook is correct here. There is no shortage of gold. Gold supplies continue to go up. Gold prices are way above mining prices. Miners make lots of profit mining gold. There is no physical shortage of gold, nor will there be at these prices. So I'm convinced that it's very likely, nothing is certain, but it's very likely gold will go down in price. But markets over the long run, but what about the short term? The short term you can't predict and you can't count on, because it can go the other way and strongly and shortly, and that can fuck up my portfolio. And so I'm looking at it, but yeah, I'm still short cold. Hi, LA Matt, long time no see. Hi from Belgium, says Jiha. Swordfish, nice to see you again. So is the crypto bottom in? We're at 1.7 trillion. Crypto is still up a lot compared to a year ago, and it can go down more. But my opinion on the markets, it is for crypto as well as stocks, is that we're in a bull market, and that means that if you see opportunities to buy, if something is cheaply priced, it's a good idea to buy it because we're in a bull market, and so I already see in crypto and in stocks great buys. Some cryptos are cheap. Ethereum not, I would say, because it has gone up a lot and it has corrected some, but it's still relatively high. Bitcoin Cash, on the other hand, also corrected, but it didn't go up a lot. And so it's at prices now of $300, or the same as it was when it forked off of Bitcoin BTC 4 years ago, or 5 years ago now. And tech stocks have gotten serious beatings. Twitter, Spotify, Netflix are at valuation of 2018. That's 4 years ago. But these companies have grown a lot in the meantime and are, well, no-brainers. Market leaders already. Netflix or Spotify for music. And that's not going to go away. These kind of services we're probably going to use for another 10-20 years, everybody paying subscription fees every month. These are very, very solid businesses. And to be able to pick them up at the price of 2018, I think is a good deal. Yeah. And so if you have also like deploying margin and deploying depth, I think is also a wise strategy. But of course, with it has its risks also, and me myself also got just experienced that getting margin called on DPI, and of course at the bottom is being liquidated, selling a piece and to pay off my loan. That's of course not the idea, and not that is not good. But okay, you live, you learn. I made the mistake of having my liquidation price too close to the market price. I was not actively following it up, and what you should do, I think, is as price comes down and it gets close to your liquidation price, you should liquidate yourself so that you don't get liquidated at the bottom, and so that you don't have these extra costs, because in DeFi actually it costs you 8% in transaction costs when you get liquidated. And of course when you get liquidated, it's the other party that decides for what price is going to be sold, not you. And you get, during flash crashes, you can get really very bad price that way. So a much wiser approach is to actively liquidate yourself as the price goes close to your liquidation price. I failed to do that, and I will change that strategy. But at the same time, I think that crypto, for example, Yeah, indeed, cycles. It was expected that cycles will take longer over time, and we have seen that now. But we're still in a bull market for crypto. And as I shared in the interview a month ago with Thomas, there are many indicators that it's likely to go up, and that of course has only strengthened now. So I think if you look at the probability scale here, that it's very probable crypto will go up and go up a lot, because in contrast to stocks, crypto actually are close to the end of the cycle. They are close to creating an all-time high, a multi-year all-time high, and after that another bear market for many years. That's not the case with stocks, who are like 10 years away from their cycle peak. With crypto, it's only 1 year away. So I think, of course, the greatest opportunity is in crypto for this reason. Um, and, um, and I think, yeah, the way to deploy margin or debt, if you're able to borrow against your crypto to invest more in crypto, generally that's not advised, and it is risky, but DeFi does offer some opportunities there, and if you actively follow it up, I believe that's an opportunity here. But of course, that's for the people that already are fully or more than enough invested in their portfolio. I'm still 70% exposed to crypto, was 90%, but due to the correction, it's only 70%. But should I raise my crypto exposure using my other assets in my brokerage account? No, certainly not. But can I use more crypto as a collateral to borrow against, and use that borrowed money to invest in crypto? Yes, that's a possibility, with DeFi. So I think that's an opportunity. Can you guys see me? It says a blank screen. You cannot see me? Okay, good. Monero XMR says, I looked sad in my last video. Yeah, I've been going through a hard time, but things are better now. How high do you think interest rates are going to go, Swordfish? Will that affect stocks? Great question. And my opinion here is very different than what you see in the market. And I just shared it on Twitter, the long-term chart of interest rates, as well as stocks and gold and inflation on Twitter. And I found that very, 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 very interesting. Let me share it with you also. Yeah. So let me flip my screen here. So interest rates, they are right now, well, 2021, they are at 0% still, and an absolute zero. What's the likelihood of it going more down? What's the likelihood of going up? Well, if you're at 0%, it can only go up. There are always exceptions, but you're still borrowing money when we talk about interest rates. And who's gonna? I mean, of course, actually, the interest rate is created by the Federal Reserve, by central banks. Sure, they can bring it to negative, but very unlikely. If you look at the long-term interest rate cycle, since the past 100 years, since 1930 here, 1940, the gray line, after inflation, of course, this is currently we're at 0%, but after inflation, you're losing 5% per year. And that was the case also in 1945 here. But since then, from 45 to 1985, it went up interest rates, and you didn't lose 5% per year, you ended up making 5% per year 30, 40 years later after inflation. But now we're back at the bottom, we're losing again 5% per year. What's likely going to happen? Well, the cycle will revert likely, and we're going to go back up for 30 years, 40 years, And so interest rates will likely go up, and people think Fed would never allow that, but if you study that, actually, it's not the Fed that sets the interest rates. Central banks are very powerful because they can print lots of money and borrow it at a very cheap rates, and that thereby manipulate the interest rate. But the Fed is not stronger than the market. The amount of money that the Fed has at its disposal to borrow out in the market is a lot lower than what the market itself has in money. So the market itself has a lot more money than central banks, and so it's the market that sets the interest rates, not the central banks. And so if the market decides like they want more interest for their money, then that's what's going to happen. But the way they make it look on TV is that, oh, look, the Fed has raised interest rates, and it gives the impression that they decide where the interest rates go, but that's not true. The Fed follows interest rates. So likely the market will start to want to have more interest for their money. It's at 0%. That's absurd. Who wants to lend out their money for 0%, given that it's clear to everyone that inflation is not going down, and it is high. It's like not 1%, as they say on TV. It's 5%, at least. Everybody starts to realize that more and more and more. So why would you borrow or lend out your money for less? So probably as people wisen up again, they will ask more interest, and that will just push up interest rates. But will that affect the market negatively, the stock market? No, because they are not correlated. Stocks are correlated to commodity prices, not to interest rates. As you can see in that cycle, look at my Twitter, click on the link, you can see the Google sheet there. Interest rates went up from 1940 till 1980. That's 40 years. How did the stock market do? Well, the golden 60s is called the golden 60s because it was a golden period for stocks. So while interest rates go up, you still have bulls and bears in the stock market, just like you have when interest rates go down. You also have bull and bear cycles. So there is no correlation between these two. But there is a correlation with commodity prices and gold prices. Whenever these go up, stocks go down. And whenever they go down, stocks go up. So, and there is a logical correlation there. So to answer your question, Swordfish, think interest rates will continue to grind up slowly over the next 30 years. And so now we're at 0%. At the end of the year, we're more likely going to be at 1% than still at 0%. Yeah. Hi, Dex, for sure. Long time no see. GT Clash of Clans asks, so what's your thoughts on commodities like oil, copper, nickel? Why you do not play them as a recovery play? Well, for the reason I just explained, I don't believe commodity prices are going to go up, they're going to go down. I really regret not shorting lumber when it was going up so much, and I thought that was a great opportunity, but I didn't take it because of just not being ready. It's always work, of course, any investments, but I think any commodities that go up a lot are a great short, but I would not long commodities. That's really not wise. Because people say there is much inflation. Yes, but during bull markets, stock bull markets, that inflation does not go to commodity prices. It goes to stocks prices and real estate prices and art prices, NFTs. That's where the money flows to. Because you're in a period of prosperity, because commodities are in an abundance, because there is no shortage of commodities. And yes, there are some shortages of commodities now, but because of a red tape and not because there is too little investment in the sector, or it's just because politicians put on all kind of regulations, and the market is very volatile now. It is with this whole pandemic. Then they are for months not consuming anything, and then the months after they want all, to buy everything. Yeah, of course, companies cannot. Like, of course, you're gonna have shortages that way, but it's not structural. Huh? It's not because there has not been investments for 20 years in the commodity market. If that's the case, then okay, it's not going to be solved quickly. But that's not the case. Since from 2000 till 2010, there was a commodity boom. That's only 10 years ago, and there was massive investments in all commodities, massive. Huh? And so all that production capacity is still good today, and many of it was temporarily shut down with temporary low prices. But the moment prices go up again, like for oil, for example, all these extra production facilities will can just be turned back on. So there is commodities are it's just not likely at all to go up in price because there is an abundance of it. GT clashes. Data shows that storages of commodities are drawing down. Tens of years of underinvestment and limited access to capital due to regulations. Well, tens of years of underinvestment is not correct, is not true. Huh? If you say 10 years, okay, because the commodity boom ended in 2010. So since then there has been little investment, agreed. But that's only 10 years. Huh? Never in the past, after 10 years of no investment in commodity infrastructure, did you get a shortage. It always took 20 years and sometimes 30 years for there to be a structural shortage. Huh? And before that happens, what you need to see is, first of all, that production starts to stagnate and even go down due to low prices. And so if you look at all these commodities like oil or nickel or copper or gold, well, if you can show me one chart where actual production capacity has gone down, the amount of, for example, copper produced has gone down, and not temporarily due to red tape, but like structurally. So that means like during the year of the pandemic, if it goes down that year, okay, that's normal. But right now, after now a year later, production should have gone up considerably. And if it didn't, if it continued to go down, oh, that's a red flag. Please send me that chart, and I will study it. But I'm quite convinced you can't show me any such chart. Production has continued to go up for all these commodities, and why? Because there is indeed there has been investments in production, enough investments in production, and prices are high enough to increase production. They don't make losses producing more. That's what you have at the end of the commodity bear market. They shut down production because they're actually losing money on producing. The prices of commodities are so low that they lose money producing. Is that the case for commodities? No. So yeah. The Nudge asks, hey Mark, how do you take profits when you're locked in and actively spending Bitcoin Cash? I don't know what you mean with locked in, The Nudge. How do you take profits? I think taking profits is not the right expression, but what they mean is like selling an asset and locking in a profit. Because locking in a profit you can do by selling for fiat, but then you need to reinvest it because fiat is a bad investment. But let's say that you want to like hold crypto and spend it and be just long crypto, but you want to spend it also. So how can you then lock profits? Well, I mean there are different ways. But okay, I think this is too advanced. Just sell a little bit when the prices are high, and store some fiat, and then maybe invest it later, again in the same or in something else. Hi, Suzanne. BCH is bullish. What is your take on that? No, I don't think BCH is bullish right now. But yeah, I think there are pros and cons to the BCH story. Clearly, it lost lots of ranking. That really sucks for the BCH investor. It's now at 30th place. I didn't see that coming at all. I was totally wrong in my prediction that we had reached bottom at when it was at ranking 10 or ranking 15. No, it continued to drop. So I really had the wrong calls there. But is it a done? Is it done? Is it over and out for Bitcoin Cash? I don't think so. I think that something like Bitcoin Cash is the real deal, and that has lots of value, but it's not always valued. Huh? There are lots of times when people don't care about the real deal; they care about the latest trend and the latest hype, but the real deal over time it can be ignored, but there will come a period where people want the real deal also, huh? And so that will come, and it will come for, and then Bitcoin Cash will profit because the love for Bitcoin is still very high. Eh? Many new investors that come into the cryptocurrency industry value Bitcoin, and they buy Bitcoin. They think they're buying Bitcoin BTC. Huh? That's what they buy. But over time, they will also learn about the industry and learn, oh, there are different Bitcoins, and what's the history on this, and okay, this one actually has cheap transactions, and actually that was actually the goal of Bitcoin. Actually, this one is building things on top of it, like DeFi and NFTs and all these innovations that you have in crypto. You have that with this Bitcoin, but you don't have that with the other one. Like people gonna discover that, and so uh, I think it's still a good investment, but I think I was wrong in my estimations, too positive, too optimistic, and I don't believe any longer my predictions that I gave before, that I believe that again 10% market share this cycle, meaning that the price will go up to 30k a coin at the end of this cycle. Looking how much market share that it lost, way more than I'd expected. Yeah, I have to adjust that expectation, and I don't believe we're going to go up so high. If we peak out at 7 or 10 trillion in this cycle, Bitcoin Cash, I don't think it will reach the 10% market share there anymore, but it can reach half of that, 5% or 3%, and that means that we have a top around 10k, not 30k. Huh? But okay, that's good enough, huh? Um, Hi, Isabel. Nice to see you too. Hi, Harvey Williams. So many famous names. So he says, Harvey Williams, I'm thinking of shorting gold, but he's too scared in the current environment. Well, it's still interesting. I mean, if you don't have cash and you would like to invest in something, you see certain kind of stocks you want to buy, short some GLD, you get the cash. It's a great deal, and yeah. I mean, you could also like skip it. You could also take margin loan, margin loan with the best, like interactive brokers cost you 5%. Many brokers will charge you 10% interest per year. Um, if you short GLD, you actually borrowing at 0.5%, huh? um, because that's what it costs you. Huh? Um, can gold go up in the short term? Yes, it can. So there's a risk to this trade, but if gold goes up, you think these stocks that you're going to buy with the proceeds are not going to go up? That's very unlikely. Huh? If even gold goes up when it's in a bear market, then likely the stocks that you're going to buy with the proceeds will go up more. And so you'll be protected that way. So I would say go for it, maybe with a small position. It's a great time to start right now because, yeah, I think there are some great buys in the market. Tech stocks and ARK Invest, for example, the ARK fund dropped from a high of $180 or $170 to now $70. I think that's a great entry. All these tech stocks, many of them have gone at interesting prices, like Netflix, Spotify, Twitter. Yeah, I mean, I mean, the best you can buy is companies that have evidence of growth. And if you look at Netflix and Spotify, they have doubled their revenues in 4 years, 3 years, 4 years. Um, and if you look back at the last 10, 20 years, they continue to double every 4 years. Will that stop anytime soon for these companies? I don't think so. That's another 10 years of doubling revenue growth. Um, and they have such a strong position. It's really comparable to Microsoft at the time, or Apple, but in the early days. I mean, not the early days, like the moment they become market leader, is that the end of it? No, it will take 20 years that they're going to lead the market. Once they are the basically the monopoly in that industry, which is the case with Netflix. It's a monopoly. And it's the case with Spotify. It's a monopoly. Um, uh, I mean, and why is the monopoly? Because of government regulations? No. It's because the network effect. The more subscribers you have on Netflix, the more money you make, and the better movies you can, the more movies and series you can make, and the more movies and series you have, the more subscribers you're gonna get. And so it's the same with Spotify. Like any song you want to hear, they have it. In contrast to Netflix, but with Spotify, anything you want to hear, they have it. Um, um, I don't know how they do that. I wish they do that with movies and series also. Netflix, that they have everything you want to see. That's not the case. But with Spotify, it is. So yeah, great offerings. And like, yeah, in the West, in these Western countries, the United States, or European countries, many already have Netflix. There's little growth there, but the world is very big, and actually, in all these developing countries, they also want to see Netflix, and they also want to listen to Spotify, and they will also be paying $10 per month for it. So there's still massive growth potential there. Amadeo Brands. Hi. Hi, Jarmoviki. Hi, just my rambles. Long time no see. FM Alexander continues to post about hacks. I have to say another story that I really was wrong about, but I don't regret not investing. Hacks by Richard Hart, like a project I did not support because of how Richard Hart acted in the crypto community. But he has made tons of money, even became a billionaire with that Hex project. I can't believe it, the things I see. But this, I don't understand it. Probably a Ponzi scheme that will collapse sooner or later, because I haven't studied it, but I think it's based on yields. So the more hacks you have, the more returns you make. And so the more interest rate you get or something. But but and so people are hodling. But yeah, there's no real underlying value. The real underlying value is not how many extra printed coins you get, but if there are, like, yeah, if it is valued by people for real. For real, what does that mean in a currency? It means, not do you save it to get interest on it, but also do you spend it, do you use it with merchants, with service providers? Do you value it as a currency? Not just as an investment, but as a currency. And 99% of all these cryptocurrencies will fail on that test, because they don't value it as a currency, only as an investment. That means the moment it's not a good investment anymore, it's out the door, and it will become a bad investment. And what's left then? Nothing, because it's not a currency. Nobody values it for its currency characteristics. So I won't be buying that for my kids. FM Alexander, thanks for the offer. Harvey Williams. Yeah, let me go to the next question because I talked too much about that. So did you start studying, Ivona, NFTs, and what's the story about it? Yeah, I have published a video on how to invest in cryptos and DeFi NFTs. Take a look at it. But in short, yeah, I can see the potential. It's great to see. You never can predict what's going to be big. You can sometimes, but this one, for example, I totally did not see coming. And I've ignored it for a half year, a year, these NFT stories. But yeah, I started looking into it, and I can see why it's interesting and why it's valuable. Take a look at that video. I go more into detail. But I have not found a way to invest in it. I understand there are like many NFTs. It's basically like paintings, or so they're individual offers. And which one should you buy? I don't know. I haven't studied it. Is there an index of sorts? That could be interesting. But I think that yeah, it's really great for cryptocurrency, because I just competing with fiat currencies, it's not gonna work if that's the only thing you do. If you're only a currency that's competing with fiat currencies and only used as money to pay people and to save, it's not gonna succeed, because well, governments want to hold on to their fiat monopoly, and so they have a lots of power to slow that down, and so but of course, if there are lots of innovations in these new cryptocurrencies, things that you can do with it that are absolutely impossible with fiat currencies, yeah, then it's inevitable, and then over time it will just take over the world, and that's really proven with DeFi, but also with NFTs, and so yeah, that's great, and the more of these innovations, things that you can do with crypto that you can't do with fiat, the better. Hi Yannick Koval, nice to see you. Nvidia, Dex for sure says it's also great buy. Interesting. He says it's a monopoly in artificial intelligence. Revenue growth has been very strong and high profit margins. So thanks for the tip, Dex, for sure. Yeah, I really agree with the story that Catherine Wood has been explaining so well. That and that also is told by Julian Simon, that I've been talking over the years from time to time about his that the bigger we become and the more advanced we become as a population, as a species, the faster we also innovate, and the faster things change in society, and you can see that in the stock market also. For example, the car industry is crazy. What happened there with Tesla? Also another good example where I was wrong to sell a winner. I'm sorry for the bad advice to sell Tesla when it was at 300 billion and now it's at 1 trillion. So it tripled after that in only 1 to 2 years. So that was also a wrong call of mine. And I go into depth in that previous video, the big mistakes I've made, and And selling winners is one of the big mistakes I've made. And so I also did that with Tesla. When it was 300 billion, I was saying like, hey, it's the same valuation now as all other car companies combined. So it's seriously overvalued. After that, it tripled again. Um, uh, so, but it's just total disruption of the industry, huh? And you would think that then, oh, let's buy these other companies like Volkswagen or because well, or Toyota, because they are well valued very little compared to Tesla, but just like you see in the movie industry with Netflix, or the music industry with Spotify, the leader has so much is so much ahead of these others, these old companies, that there's no chance for them to catch up, but even to hold ground. Like they're gonna lose their total market and gonna go broke. That's the reality. Also for these car companies, like, yeah, I'm impressed with Volkswagen, their Porsche. I like the Taycan, great car, but as Salomandrin, also a great YouTuber who has been publishing videos now, and used to be only in cars, and now he's also into cryptos and NFTs. I recommend to follow that channel, Salomandrin. But as he points out, it's not about cars anymore, it's about smart cars. And there's a fundamental difference between these two, as much as it is about phones or smartphones. Nokia was phones, cell phones. Apple came with the iPhone, which is a smartphone. There's no chance anymore for the phone companies or cell phones companies like Nokia to survive if they don't switch to smartphones. And they didn't, and they're out, they're gone. And it's also not about keyboards. BlackBerry had keyboards, and then you can say, okay, that's like a smartphone. Yeah, but it's not a smartphone, it's just a keyboard, and they're out too. And that's what you see in the car industry. Like, yeah, Porsche is building a great electrical car, yes, but it's not a smart car, it's a stupid car. And it's full of old traditional stupid stuff. There's even a clock standing in the middle of the dashboard, an analog clock, and there are like 3 or 5 displays. Like a smart car is also simple. Like one screen is enough. You don't need 5 screens. But what Tesla is busy with is smart cars, means they actually like are smart. They look around them with cameras what's happening on the road. The goal is that they drive by themselves. They're not there yet, but they certainly have made big steps ahead on that front. And even the leader, even a company like Volkswagen, who is a total, was the monopoly in cars before, monopoly together with Toyota. I mean, they are really so far behind that it's not looking good for them. And all the other companies we don't even have to talk about, because they're gonna go broke for sure. But maybe a company like Volkswagen or Toyota, if they are really, really starting to work very, very, very hard, maybe they will survive. But that's a maybe. So to finish my thought here, like, I think Catherine Wood is right, that innovation is really disrupting at a faster rate, and so if you act like a traditional investor, investing in index funds, for example, they used to work to preserve your purchasing power, but I mean, yeah, it will probably continue to work to preserve your purchasing power, but that's it. You're not making money. You have 5% per year on average, which is the same as inflation. So you really need to like invest in in innovation, huh? And in companies that disrupt and that change the world and that offer value and show evidence of strong growth. And yeah, you have an opportunity right now. The market has corrected a lot in these kind of stocks because they did very well in 2020 after the Corona crash. They went up a lot, but so much that it was ridiculous. Huh? But now they corrected a lot, so this is a second chance to get in, which I'm taking. I invest in ARK, and I hope to invest in these other companies I mentioned also. And I'm using margin for that, huh? And I think that's wise, huh? Or selling some gold, huh? Short, and with the proceeds investing in these stocks is a good strategy, I believe. There's risk, of course, huh? When you much more risk actually when you do a margin strategy and when you borrow money to invest, huh? So you can just leave that out also. But I would certainly flip my stocks for these kind of growth stocks. That's now a good time to do that. Or invest more, flip if you're still a majority stocks and a minority crypto. Now is also a good time to go invest more in crypto. Huh? Or if you still a majority have very big exposure to real estate, it's also a good time now to sell real estate and go to more to stocks or crypto. Or of course, especially if you're still investing in precious metals, like that's totally, or some commodities like that, that's the first thing that you should sell. Or bonds, if you still have bonds or gold or silver or commodities long, that's the first thing you should sell. And now is a great time to sell some of that or all of it for some growth stocks, tech stocks, or for some crypto. Yeah. Hi, Hossein. Interesting question. Do you think cutting losers and keeping winners goes against the original idea of value investing, invest based on fundamentals? It's a great question. And I think, yes, it's two different investment strategies that go against each other. That's true. But I believe if you combine them, then you're actually a better investor. Huh? So, for example, a company or a cryptocurrency has good fundamentals, meaning strong growth, but at the same time the price is going down. A fundamental investor would say, well, that's a better buy. You need to allocate more. But someone who's looking at the perspective of a TA trader, or keep your winner, cut your losers, would say like, this thing is going down. Let's cut it off. Let's sell it. So it's two opposite actions. And I think if you combine them, which I haven't really done myself greatly, but I think you become stronger. And how does that look in practice? Well, if it goes down, but the fundamentals are improving, okay, that's an interesting buy. But should you buy there? No. What you can do is you can wait till also the TA says that it's going up. And so when it goes up, only then you buy. Huh? And yeah. So I think you can combine both of them. Sorry, I'm getting a call here. I have to put that on. My baby's calling, but I can't pick up right now. Um, um, would the COVID craziness go away? Well, I think it will just slow down over time, huh? But yeah, I underestimated how big this I would stay. Um, but I do think it's like slowing down. It will slow down over the years. But yeah. Hmm. Do you think crypto will correct more or not? I don't think that's likely. I think I'm following also a good friend, Sonny Mulder. I retweet his tweets sometimes. Yeah, he made good predictions. He thinks it's not likely to go below 30K BTC, and yeah. Mm. I mean, a month ago it already looked very bearish the market, and then now it's even worse. So I think it's not likely. No, it's possible, but not likely that we go down more for crypto. Mm. So yeah, I'm through the questions. Thanks so much for joining. I'm gonna keep it short today. So yeah, it's a master investor show. In summary, um, the bull is still on for stocks and for crypto. Yes, interest rates will likely go up over time, but that won't destroy a stock bull market, and it won't destroy a crypto bull market. Interest rates are very low. That's why I also like debt. Using debt to invest in these markets is a good idea because interest rates are very low. Um, However, some other markets they have gone up a lot already, like real estate. Should you use debt to invest in real estate? Well, it already went up a lot, huh? Um, and it's not an asset with lots of potential. It's not going to 10x your purchasing power, huh? But for sure, selling bonds, selling commodities, selling gold and silver, like that's a clear sell for me. And so that certainly should go out. And of course, the cash positions they don't give any interest. You shouldn't be having a cash position. Huh? If anything, you should have a debt position, but not a cash position, huh? In my opinion. Mm, if you take a small, if your debt is only 10, 20, or 20% or 30% of your assets, the chance that you're going to get margin called is very low. Um, um, but I see lots of talk about markets going down more, and that's usually a sign it's not going to go down more. Um, I do sense lots of fear in the market. Yeah, lots of bearishness. But yeah, if you look at long-term cycles, yeah, it's no reason for it. Yeah, there are actually some indicators that there's a recession in the economy. Of course, this I think the COVID thing has really like destroyed lots of people's businesses. But the changes that you saw because of it for the most part would have happened anyway over the next 10 years. It just has accelerated it, huh? Brick and mortar stores, of course, like they're gonna get less than online stores, or work from home is gonna go up over time, of course, huh? So these are evolutions that would have happened anyway, but they just happened a lot faster. um, mm, What's the best asset to invest in 2022, in my opinion? I think it will probably be NFTs or NFT service providers. Um, that could be certain cryptocurrencies or crypto platforms that are leading in this kind of in this new industry of NFTs. But yeah, when it comes to inflation, the Federal Reserve printed 15%, 1.5 more US dollars last year in 2021. So they're slowing down because the year before, during the Corona crisis 2020, they printed 75% more US dollars. But of course, the 5 years before that, actually, they took dollars out of circulation. You can see that on my Twitter, on my Google Sheet. Average inflation of the amount of money you print is about 10% per year the last 10 years. So it's not crazy. It's not like, yeah, of course it's high, but it's not gonna lead to hyperinflation. Here I disagree with, for example, Salomandrin and many people that think that, oh, we're gonna get hyperinflation. No, for that they need to print a lot more than what they do. They are much more responsible in the US, for example, than in many developing countries, in the amount of money they print. And they do take money out of circulation at times, and that brings down the average a lot. And I also am positive overall about the world. I think that despite these kind of crises, that if you compare to 100 years ago, we're very well off. Yeah, this is a global crisis, but 100 years ago it was a global war. That's a lot worse. The amount of destruction to the economy and to people's lives was a lot higher than that is now. Now there's also destruction of property and of life, but compared to the global population, the amount of people that live, it's a lot lower. And so that's during bad times that you see that it's actually not as bad as it used to be. And during good times, well, it is wonderful. We have so much. Yeah, we're lucky to be alive today and not 100 years ago. I'm very positive overall about the economy. Thanks so much for joining, and have a great remaining week.